Okay, Kelvin, because before you get going, I just want to ask you a question because
Okay.
we did have this offer that's come in, and what I've noticed is that you got all these little mortgage companies
Mm-hmm.
that are I've never heard of before, and you get an offer that comes in, you get a letter from a loan officer, and it's like, I don't know if this is good or not. I mean, you call the agent, you work with this guy. Oh yeah, I work with them all the time. It's like, well, who are they?
And you don't know how much business that realtor does. So the
Right.
3 transactions they did so far this year.
Right, or in their career.
Right, they did 1.
Yeah. So how do you? First of all, how do these things pop up? Well, I don't know, understand it. And what's the risk of working out of the basement mortgage company?
Well, to start a mortgage company, you have to obviously get a surety bond but just get licensed with the state. So it's not a huge laborsome process or you can be a broker shop within a week, so that's concerning because you don't know the background or reputation or history of those individuals. Now, I'm sure the state would argue that they do this background check and all this, but who knows on that. I think what you want to always look at when you're trying to figure out if that's a good offer, just find out how long they've been in business, what kind of volume do they do, what volume does the company do. When you look at AMEC, we have a $10,000 closing guarantee saying if we pre-approve you, we guarantee that you'll close. And so I think, asking for that type of documentation to see if they have anything like that. There's a handful of companies in town that offer that, AMEC being one of them. So, it's kind of a crapshoot. You got to contact them and just kind of see what the history is there. But
most
fairly easy.
They're a broker for somebody.
Yep.
They're not using their own money.
Oh,
they don't have their own underwriting. And,
no.
Not to say that that's necessarily awful, but you do lose some control.
Yep.
Over the whole thing.
Yeah, we have a transaction that's closing. This past Friday, we record on Friday. So today and yeah, relationships matter. I mean, we got things done in the 11th hour just due to circumstances and things shifting and changing that, man, if you're in that broker world, you would not be at closing today, guaranteed, so there is that, being local and being able to control the transaction, is super important. So let's talk real quick about what's happened kind of in the markets this past week. There's always good headlines that we like to touch on, and one is tepid U.S. jobs report adds to economic jitters. So the jobs report came out, 130,000 new jobs in August, according to a monthly snapshot from the Labor Department, signaling a slowdown in the pace of new job growth. So they were anticipating 158. So it doesn't matter how many jobs. If they would have anticipated 125 and you had 130, the headline would be different, right? So they anticipated 158,000, came in at 130. Unemployment, though, is still at 3.7%, super low. Labor participation rate is high, which is great, saying that the people who want to work and can work, have the capacity to work, are working. So there's a little bit of this that, like we were talking about earlier, that there's also just the reality of some of this.
We were talking about it at coffee before the show. We were talking about the labor participation rate and jobs creation, and it's like, when you're running at 3.7% unemployment, anyone who wants a job has one, right? I mean, so how many more jobs do you think you're going to create? I mean, the job creators are looking at, I can create a position, but I can't fill it. So I'm not going to create the position because I can't fill the position. Yeah,
this last weekend, we were talking about what everybody's doing. Well, we had 2 different weddings, and at one of the weddings we were at, I was talking to a gentleman who runs a company that does all the updates for Apple. So you think Apple updates everything. It's really their company that updates. And we were talking about their labor force. And he said, man, I would love to hire more. Right. I can't find them. They're not there. I mean, he said, have your kid learn coding. It's 55 characters. Have them learn coding. So at least they have a rough idea and they'll have a job like that. And then they teach them the rest, And so there's huge opportunities for jobs. And like you said, some of the jobs just aren't here and available. So that's out there. So there's economic jitters all the time. And there's another headline said the Federal Reserve is expected to cut interest rates another 1/4 point later this month. So we'll see if that happens. the bond market is already pricing that in. They're actually pricing in a little bit more than that, which has kept rates, really relatively low in terms of what's happening on our front, right?
Mhm.
So when you look at most prevalent rates this past week, you're talking 30-year fixed rates are probably mid 3s to high 3%. So I always do because there's things that affect it, right? The down payment affects it, the credit score affects it. All these things kind of affect, is a condo or is a single family. So there's things that affect it. So that's why we always say it's in this range, FHA, low 3s, 3.25, probably 3.5, 15-year, 3 to 3 3/8, really nice. We're refinancing some people down from 30-year down to 15 years. So some really nice opportunities there. And, when we look at what the volume is right now, I mean, this over August, applications for purchases were down a little bit, but our refinance volume for the company has been really heavy. And we see, one that I did this past week was super rewarding. I mean, we literally closed 8 months ago. And when we did that, we said, from the proceeds of the sale of your home, let's put less down, get rid of this other revolving debt that they had a lot. I mean, it was such a fun process of going through. Well, here we are 8 months later, right? Rates drop, their credit soars. So now they're 758 mid credit score, and we are mid 6s when we closed, right? So it's everything worked, right? So now we're coming back around. The mortgage insurance monthly goes down. The rate is going to go down to 3.5. I locked them at, and they were at 4.5. So $276 a month in savings. That's a big deal.
That's a big deal.
That's a big deal. So it's kind of rewarding. And that's why, you guys make fun of me a lot and stuff about, having a more in-depth conversation and doing that. But I'll tell you, man, it works. And it was kind of cool. And our, we have a lot of volume coming in through refinances right now just because of that. And, property taxes are due in October. So we're having to work through that a little bit, but there's a huge escrow refund then to clients when they're refinancing. We're skipping 1 to 2 house payments when we're refinancing, which is kind of nice for people. So it's kind of that unseen, like, hey, if I can just not have a house payment this month, get better positioned. And, so a lot of people are doing that. People are moving from the 30-year to the 20-year to the 15-year, or they're just lowering the rate with the same term, taking cash out, getting rid of some of that bad debt versus, if you can get money at 3.5 or 3.75% and pay off a bunch of credit cards that are at 15 to 20%, makes a ton of sense. So
yeah, if you're looking at saving money, refinance is a great thing to take a look at. I have a client that you guys helped, and she just saved $250 a month. Excuse me, didn't have to do an appraisal on the property either.
Yeah,
and her mortgage insurance dropped, and we just helped her buy, I don't know, 18 months ago, something like that. So she called me and said, "Here, look, this is what Jared's saying. What does it look?" And I was like, "It looks."
Is this real?
Yeah,
is this real?
Yeah, it looks fantastic.
Does Jared have an office, or
we just take? Well, he did the loan, so we just looked at what the value was for a little bit, and that's a very subjective thing with the appraisers going out there. So I can't say it definitively, but it looks really good. And they went through the process and ended up not having to do the appraisal.
Yeah, we're getting a lot of those right now. These property inspection waivers. So there's so many sources now out there that give valuation that, we have one site we go to, it's 6 different tools that measure value. And so I think, hopefully we get more and more of those. I know Jared's doing a lot. And he had 3, I think this week he had 3 that not even an appraisal. So it's really nice. So when we offer the free appraisal, which we do, sometimes we don't have that cost, which is kind of nice too.
I have a question. Are rates seasonal? Like we can, our real estate side, there's a definite pattern to the year, a price fluctuation that kind of waves through the year. Do you find that rates are like that as well, or are they
not
tied
as
to
much?
other things?
It's just tied so much more to the, kind of health of the labor market, inflation, Federal Reserve activity, the economy. You've got all those factors that come in, and we get nervous daily, to be honest with you, because earlier or at the end of, this past week, we had a day where rates suddenly, the market just shot up, and we're like, oh, are we done?
Yeah.
I mean, literally, because it's that cyclical,
Quick.
and then it comes back down again. It's like everybody. I mean, so there's a sense of urgency that we have. So, hopefully when people call and we're like kind of not pushing, but pushing, you know.
Yeah, it's like when a
saying,
house
hey,
comes on the market
let's
Thursday,
go.
and Saturday it's still available. And
Yeah, we get
know
nervous.
it's a good one.
Yeah.
You gotta go. You gotta make
go,
the offer.
you know. So we're encouraging people. Let's lock this down right now, because we don't want to miss the opportunity. Because it's been a long time since we've had rates here, and again, our predictions have been wrong every year. Saying that we're going to be at 6%.
Is this the new normal?
I hope this is the.
You know what I'm saying?
I'll take it.
You know, maybe getting back to 6%, which is the historical norm, isn't the historical norm anymore.
Yeah, maybe the norm is 4.
Yeah.
You know, who knows? So give me a call, 651-231-2500. Again, 651-231-2500. Love to have a conversation.
That's it for this week. I can't believe it. We're out of time already. 612-627-8000 or hitnergroup.com. We'll be back next week.
You've been listening to your Real Estate Chalk Talk with the Hittner Group, the leaders of the #1 Coldwell Banker Burnett Real Estate.